Rohr here with an early global view on Tuesday, August 26, 2014. It's currently 7:15 a.m. U.S. Central Time, and we of course are starting our video coverage for the week today in deference to our UK friends being out for their late summer bank holiday yesterday. Welcome back. And it was quite an interesting bit of macro technical influence in the last few days because, of course, the primary focus on the speeches by Janet Yellen and even more accommodative than previously expected Mario Draghi back on Friday. And we're going to see the impact on the markets of the head of the ECB becoming even more dovish than previously expected. So, how is all this playing out in the markets? Well, looking at the short-term view of the S&P 500 future, as always, hourly chart on the left, 30-minute on the right, indicators below. What we have is a market that gapped higher, got right near 2,000, albeit, of course, with the slight discount of a couple dollars left to the cash as we get closer to September contract expiration. The cash did trade above 2,000 yesterday and settling in here at right around 1995. Well, so far this morning that's up 3 to 1998 once again. And of course that's very interesting because you have a market that, unless the bears can get the job done getting it back below the old highs, and that was 1988.5, where it tried to break down by churning sideways on Friday when it finally closed below the channel line, not just traded below it as it did here. You have a down break from right around 1991. So anything 91 back into closing right around the old all-time high at 1988.5 from back in the later part of July. That's going to be the obvious near-term support. Looking for secondary supports, of course, there's the significant congestion between 1978 and 1975, which the market churned up above in the early part of last week and couldn't ever get back below it, and that helped act as the springboard for the push to the new high above 1988.5. And of course, at this point, if the market were to get back down into the upper to mid 70s, it's both Fibonacci and overall short-term channel upward support going back to the trading lows back around the 1900 area at the bottom of the early August sell-off. If you have to ask where the resistance is, sure, 2000 is psychological, but in truth, the oscillator resistance and topping line this week point toward 2010. And that's pretty much it for the short-term view of the S&P 500.